Hello traders, you're welcome back to the Forex Geek channel. In this video, we are going to dive into something many traders might have been asking for, all right, and that is a step-by-step strategy to tackle the FTMO challenge, all right. If you're serious about getting funded and taking your trading to the next level, then this is the video for you. So you might want to grab a notebook and stick around because we're about to break down the key elements to help you succeed. And before we get started, if you find value in this video, go ahead and smash that like button and hit subscribe to join our community of traders on the road to financial freedom. Okay, so let us dive right in. First things first, let's quickly cover what the FTMO challenge is. All right, don't forget we're talking about a strategy on how to pass the FTMO challenge. All right. Okay. So for those who don't know, all right, the FTMO challenge is a trading evaluation program that allows you to prove your skills. All right. So if you pass the challenge, FTMO is actually a prop firm. All right. It's a prop firm. Okay. If you pass the challenge, you're awarded with a funded trading account to trade with. All right. But here's the catch. The challenge comes with strict rules like profit targets and drawdown limits. Okay. It's not just about knowing how to trade. It's about mastering discipline, risk management, and staying consistent under pressure. So that's why having a solid strategy is so important. And I'm here to guide you through it. Now, let us start with the foundation of any successful strategy, okay? And that is risk management, all right? Passing the FTMO challenge isn't about hitting some home runs with every trade. It's about minimizing risk and surviving the game, all right? So here's the rule of thumb. Never risk more than 1% of your account on a single trade, okay? This gives you room to cover if a trade doesn't go your way. FTMO's daily drawdown limit is 5%, so keeping your risk small ensures you stay within those boundaries. All right, and remember, it's not about the number of trades you take. Focus on quality over quantity. Okay, you only need a few good trades to meet the profit target. All right, now the next thing you need to know is having a structured trading plan. All right. The first thing I talked about was risk management, right? Risk management is necessary. And secondly, you need to have a structured trading plan, right? You need to have a structured trading plan. Without one, you're just gambling, right? Your plan should include your trading strategy, your entry and exit criteria, and your risk to reward ratio. Okay. So with respect to your trading strategy, are you focused on price action, indicators, or fundamental analysis? You should ask yourself that question, right? And then with respect to your entry and exit criteria, you need to define the exact conditions for opening and closing your trades. Okay. And then finally, your risk to reward ratio is so important. I recommend aiming for at least 1:2. So even if you lose some trades, your winners make up for it. All right. So your structured trading plan, under your structured trading plan, you need to have a working trading strategy, right? Entry and exit criteria, and risk to reward ratio. Okay, so this comes under structured trading plan. All right, And then let us talk about the mental side of trading. All right. The FTMO challenge isn't just a test of your strategy, it's a test of your psychology. Okay. Now, the pressure of sticking to drawdown limits and profit targets can make you second guess your decisions. The best way to handle this is to stay calm and focused. All right. Don't let emotions like fear or greed take over. Now, you need to take breaks, if you need to, and avoid revenge trading at all costs. Now, here's a tip, right? Treat the FTMO challenge like a normal trading day. All right. Now, one thing you need to understand is that there is no, let's say, a specific trading strategy that guarantees you that you're going to pass the FTMO challenge. All right. Now, passing the FTMO challenge is dependent on the trader. Even if I give you the best strategy, but you do not know how to manage risk, you will end up not passing that challenge, because it's not about the strategy itself. It's about the trader's discipline, right? It's more of the trader's discipline than the strategy itself. That is the reason why I want to emphasize in this video on the importance of discipline, right? Having a risk management strategy in place and having a structured trading plan. If you can remember, I mentioned risk management even before I mentioned the trading plan, because if the risk management is even the risk management ought to be given even more priority, right? Because if you have a good risk management plan, so long as you have a working strategy, of course, it's not just about having a good risk management plan and then using a strategy that does not work. You're going to fail, right? You have to have a good risk management plan and a structured trading plan, a working strategy. So if you have a good risk management in place and you're disciplined as a trader, you know when to enter your trade, when to exit your trade, how to stick to the rules and all of that, you have higher chance of passing the challenge. All right. But if you have a very working strategy, but you do not know how to manage your risk, or you don't know how to be disciplined, how to stay out of the market when you ought to, and how to enter when you ought to, then you might end up, despite having a working strategy, you might still end up failing that challenge. All right. So it is very important that you understand this. Okay. The pressure of sticking to drawdown limits and profit targets can actually make you to second guess your decisions, but it's necessary to understand psychological preparation. Okay, it's very, very important. All right, now let's quickly go over some common mistakes to avoid doing trading the FTMO challenge. All right, the one is over leveraging. All right, one is over leveraging. Mistakes. Right? If you wanna be successful in trading the FTMO challenge, you have to overcome these mistakes, right? Over leveraging, you have to overcome over leveraging. This is a big no. All right, use appropriate lot sizes that align with your risk management plan. Okay. Secondly, over trading. All right, over trading is not very good, right? Remember, you don't have to trade every day. Wait for the best setups. Okay. And then finally, the last mistake you should ignore is ignoring the rules. Right? Ignoring the rules. Now, FTMO has strict guidelines. Yeah? So always keep them in mind while trading. Breaking even one rule could disqualify you, no matter how good your trades are. Okay? So you have to pay attention to these things. All right. When it comes to prop firm challenges, when it comes to such as the FTMO challenge, right? It's not just all about having a good trading strategy. I need to really emphasize this, right? It's not just about having a good trading strategy. You need to learn how to abide by the rules. You need to learn how to avoid common mistakes that traders encounter when trading challenges. right? And you need to understand the importance of risk management. Very necessary. Prop firms prioritize risk management, right? So if you can be able to effectively manage your risk alongside having a good strategy, then you are good to go. Okay, you're good to go, right? One of the strategies you can actually use when it comes to trading challenges like the FTMO challenge is making use of a very common strategy, which is using moving averages. I'm just going to just very quickly. I'm going to show you a strategy that you can actually use without going into so much details. Now, the strategy that I just want to very briefly touch is basically the crossover strategy with the moving average. Now, since you want to trade FTMO challenge, right, you want to consider risk management and you want to consider long-term growth. Okay, so it's a very straightforward strategy that is effective, and it's a crossover strategy. Basically, when the 50 EMA crosses above the 200 EMA, you have a buy signal. You do your calculation, ensure that you don't risk more than 1% of your challenge account, right? If you risk 1% in a trade, it means you have 5 opportunities before the 5% maximum loss. Although I think it depends on the kind of challenge type, right? Yeah, if you have a maximum drawdown of 10%, it means you have maximum of 10 losses before you fail the challenge. If it's a maximum of 5%, you have maximum of 5 losses before you fail the challenge. But so long as you stick to the rules, you will likely not have those consecutive losses. And so long as you have a good risk to reward ratio, for example, if you have a profit target of 10%, right? And you win just 5 trades with a risk to reward ratio of 1 to 2. If you are risking 1% to make 2%, you will notice that just 5 trades have given you a 10% profit target, right? So if you, after you get the bullish crossover, you calculate your lot size, all right? The nearest swing low is going to be your stop loss level. And this is giving us about 40 pips, right? So a potential profit target should be at minimum of 80 pips, minimum, right? Doesn't mean that you must exit at 80 pips, right? But just ensure that your take profit target is minimum of 80 pips. You can use nearest resistance zones for your take profit. So what I recommend is once you've calculated your potential loss, which is 40 pips in this case, measure your entry point to your potential profit target. For example, the nearest resistance, and that is giving us about 1200 pips. So that is a risk to reward ratio of 1 to 3. So I did when we had entered this trade, we were risking 1%. We're going to make 3% of the account at once, right? That's going to give us 3% of the account. So if it is a challenge that the target is 10%, you just have 7 more percent to go. One trade has already given you 3%. So you get the logic now. Now, even if we find another opportunity, for example, let's look here. We can see we got another opportunity around here, right? And then after we had the bullish crossover, now I'm going to recommend using this strategy in trending markets, trading only in the direction of the trend, because someone might ask, what if we had entered a sell around here? Do not enter a sell around there. Why? Because it's a bullish trend. Okay, so this strategy basically is trading in the direction of the trend. All right, you are trying to pass your challenge as quickly as possible, and at the same time employing proper risk management. Trying to avoid unnecessary losses, basically. So stick to the trend. Now we're going to be looking for only buy opportunities because this is a buy trend, right? So having this crossover, would have considered entering another buy right after we got a confirmation, right, and then setting stop loss right below the swing low, right? We can actually use this for our stop loss, or you can consider using this for a stop loss as well. But if you want a tight stop loss, this is also going to be a good place to set your stop loss. And then for our take profit, we're just going to measure the, like I said before, you're going to measure the the risk you're taking. So that's about 20, let's just call it 20 pips. Or okay, that's actually about 18 pips, right? So you need at least 36 pips for your target, right? You need about 36 pips for your target. So if we're risking 18 pips to make about 36 pips. You can see this already giving us about 50 pips, right? So that means we are having a risk to reward ratio of, let's say, close to 1 to 2.5 or more, right? So if you have made 2.5% from this trade, because this is also a winning trade, right after the bullish crossover happened, this was a winning trade. So this gives us additional 2.5%. So that means you already have made 5.5%. Right? So it's quite a straightforward strategy. All you just need to do is wait patiently. Wait patiently for the market to present a good opportunity, and always employ risk management. And like I said about structured trading plan, the strategy has specific rules. Your entry criteria is when you have the crossover. For a buy trade, a bullish crossover. For a sell trade, a bearish crossover. For a buy trade, it must be a bullish trend, and for a sell trade, it must be a bearish trend. Must. All right. Now, as I already said, risk to reward ratio as well, minimum of 1:2. And then during the course of your trading, avoid over leveraging, avoid over trading, and avoid ignoring the rules. So that is it for this video. Success in the FTMO challenge requires a winning mindset. Okay, so celebrate small wins even if they are just following your plan perfectly for the day. All right, focus on the process, not just the profit target. Remember, passing the FTMO challenge is a stepping stone, right? It's not the end of your journey, but the beginning of trading with a larger account. And that is it for this video. If you found these tips helpful, smash that like button and make sure to subscribe to the channel. Let me know in the comments what part of the challenge you find most difficult, and I'll create more content to help you out. Thank you for watching in the meantime, and I'll love to see you in the next video. Let us conquer the FTMO challenge together.